Welcome to ISE's Equity Index Weekly Outlook, a weekly outlook on ISE and other industry indexes, hosted by Patrick Ceresna, a derivative market specialist and investment manager with extensive expertise in options and the broader derivative markets. ISE trades options on more than 15 proprietary sector indexes, as well as broad-based indexes and a variety of licensed benchmarks. ISE continually enhances its trading systems and develops new index options products to provide investors with the best marketplace and investment tools to trade smarter.
Hello and welcome to your ISE Equity Index Outlook for January 3rd, 2011. This is Patrick Ceresna. As always, I start off with a chart of the S&P 500 using that SPDR's exchange rate fund symbol SPY. When this flagging formation developed back in November, we were looking for a follow-through rally that would eventually test up into this 125, 126 area. Even a couple weeks ago when we, before the holidays, we were suggesting that any short-term pullback would simply emerge to being a buying opportunity on the upside. We've tested our upside 126 target and are finding overhead resistance in here. And this week will bring some critical information. There's one of two scenarios, obviously, that will really play out. Either that January profit-taking cycle really starts kicking in right off the bat, and with this 126 acts as overhead resistance, and we just begin selling off this level. Or two, there still has to be another leg higher before that profit-taking cycle ensues. We are anticipating at some stage in January we will see a multi-week market pullback. It's just about where and off what level it actually begins, and this is why this week will be so critical. If we do have any solid breakout above the 126 level on the spiders, even though we do have the 129, 130 focal point up above, the market may only make it up to about the 128 level. So there is a chance that we may see a midpoint stop for any rally, but we certainly can't rule it out. The simplest thing would be that if come Monday, Tuesday we have technical breakouts to higher highs on the spider, then recognize that the window is open for a follow through up to 128, 129 easily on the upside. In the same regards, if we can't see any rallies holding above 126, then we must start considering all the scenarios how a market pullback would look off these levels. Next, I want to take a look at the ISE US Regional Banks Index, which is symbol JLO, and we were suggesting that with that breakout a couple weeks ago above the 123.50 area, that any consolidations that hold that support line will be used as a support to rally it up to the 124.50, 125 target on the upside. We are now right at that overhead resistance. This is where all the highs came in over the summer, and so it should be a formidable resistance. Now, if the market does go for another leg higher, like we were suggesting on that spider, then we certainly can break above this zone. I don't believe that even a rally higher will see the 126.50, 127 in this go about. So even if we do have a temporary break above here, I would be looking for a best 25.50, 26 on the upside before that profit-taking cycle can ensue. I think that a target for February, March would be much more realistic for 27 or higher on the upside. Next year, I want to take a look at the ISE Syndex, which is a symbol SIN. This is an index of all the casino, tobacco, and distiller companies. Essentially, we've had this little triangle formation developing here on the Syndex back in November. Essentially, the Syndex has worked its way higher and has even popped its head above the 133 level, which we've marked off as a focal point. There is room for the Syndex to finish and move all the way up to the 136, 138 level. But this entire zone up here should act like a very big overhead resistance level within these 5 points up here. There's some major highs that came in the Syndex in these areas, and it would be difficult for the Syndex to break above these zones without there being some form of consolidation up in here. I don't want to imply anything bearish, but rather simply that it should be very difficult to make any bullish progress here. Somewhere along the line here, we are anticipating a good, healthy profit-taking cycle to ensue. So if we do get that temporary break above, let's say this 133.50 area, 134, look for a move of maybe up to 136, 138, but look for that overhead resistance. Next here, I want to take a look at the ISE Home Builders Index, which is the symbol RUF. More or less here, we had the home builders find overhead resistance up in this 1010 area, which was our target all along for where there was some overhead resistance. But so long as the home builders create a little flagging formation here, we could see a testing even as high as the 1030 area on the upside. This 1010 to 1030 area up above will be absolutely critical because there really is not much overhead resistance on the home builders once they can get above that area. So really it would be a very bullish accomplishment if that any profit taking cycles off this area are contained into just shallow flags or consolidation points from which a new rally can ensue, because anything that can springboard above this zone would really open the window for some significant bullishness. Next year, I want to take a look at the ISE Natural Gas Index, which is symbol FUM. We had again in that November that little triangle formation, and now a continuation higher. This 117 to 119 area marks our first major targets, and you can see that we even popped up temporarily up to 120. But you can see the stalling candles developing in here. It would be natural for some profit taking off of these levels right in here, but we do have a number of measured moves that even target as high as the 125, 130 area. The question becomes, can the natural gas index target those in a straight line motion, or does it first need to have a good healthy profit taking cycle before it can gun for that upside target? We're not in any way bearish on the natural gas, but simply implying that it would be very natural for some profit taking at some stage here. Finally, I want to take a look at the ISE Mini FTSE 100 Index, which is a symbol UKX. After that flagging formation developed back in November, we had the overhead resistance at the previous highs at this 580, 590 area, but we were targeting a measured move that completed itself in this 600 to 620 area on the upside. There is a 630, 640 focal point on there, but we wouldn't think that that would be achievable in the short time horizon. That may be something that maybe in the first quarter would maybe somewhere where you could target on the upside. Nonetheless, with this rejection and reversal here that we've seen, we could see some profit taking develop here. But if the whole market turns bullish here in the first week of January, we could still have another reversal and a solid test up into even 610, 620 on the upside before we really reverse. So we don't want to officially call this a bearish reversal yet. If the global markets as a whole have one more leg higher, FTSE can easily still swing up. But overall, we're looking for this move to more or less be already complete. That was your ISE Equity Index Outlook. Thank you for joining me.
Thank you for participating in this week's session. Please join us again next week. For more information about Patrick Ceresna and to sign up for free index options trade alerts, visit www.optionsource.net. To learn more about ISE index options, visit us at www.ise.com/indexoptions.